What is going on, DeRosa Insiders community? This is Matt Faircloth, and welcome to the Cash Flow Digest. There it is, right there. Cash Flow Digest. Holding up your cash flow with my hand. Welcome to the Cash Flow Digest, guys. Have a little bit of fun today. We're going to be talking about all things cash flow, as we always do on this show, talking about how you guys can build passive income streams, active income streams, whatever it is. Cash flow showing up on a daily basis is what this show is all about. Some of you guys might have seen this coming, right? And I'm not poo-pooing New York City as a market. It is a market that's great. It's a market, it's, the center of the financial universe. It's a great city, and that I'm not a New York hater, okay? Either in sporting events or in the city itself, and certainly not for any other reason. New York's a great place, but New York real estate has likely gotten a little overinflated, and it's perhaps even overregulated, and the signs of that are starting to show. And I don't think that means all of New York City real estate's about to go into foreclosure or whatever that means. But what today's article that we're going to share with you guys is all about is that there is a major change coming in the pipeline in the value of the apartment buildings and of the multifamily in New York City. $75 billion. That's not how much the real estate's worth. That's how much it's dropped in value. Real estate of New York City has dropped in value by $75 billion. And there's a few reasons for that, right? Number one, the real estate market in New York, rent-wise, income-wise, went boom, like this big overinflation. The apartment that used to rent for $2,000 a month is now renting for $5,000 a month, right? And so the market is finally hitting the top on what rents could be receiving and could go to in New York City, right? Now, it's center of the universe. A lot of people still want to live there. So I don't see New York City rents falling off the map. Another reason why New York City real estate is starting to fall drastically, and this is, you guys might have read articles on this. This is not the only reason, but a major reason is regulation. New York City real estate is heavily regulated. It is something that the government gets involved in quite a bit on how much you can charge in rents. And I have friends that own New York City real estate, and the real estate tax increase in New York City, it is expected that if you own a property in New York City, it's expected for your real estate taxes to double, with a capital D, double. That means if you pay $1 in real estate taxes, it's expected that real estate tax is going to be $2 and then $4 and then $8 over a short period of time. Rent control is one of the reasons why New York City real estate is starting to really feel the pain. Second, and if you think about it, guys, what you've got is you've got the government in some ways saying how much you can charge on the top end of properties, but the government's also coming in on the bottom end of property value and squeezing the revenue side, squeezing the bottom end of it, right? So if your revenue is fixed, if the city's saying you can only charge $800 a month to the person that's lived in that apartment for the last 20 years or whatever it is, that's rent control. What rent control in essence means is that someone gets a legacy rent charge from a long time ago, and you can't increase their rents, and you can't increase the rent on that apartment until that person moves out, right? So we end up having in New York City people that live in their apartments for 20, 30 years because they're not going to get the deal they got anywhere else. You got people living on the Lower West Side for $800, $900 a month because they moved there when that was expensive to pay that much rent. But New York City won't allow those landlords to increase their rents by much at all, right? That's number one. Number two, you've got declining rents because the rents spiked so much. And the third thing is the expenses, not just real estate taxes. I already highlighted that, but also other things, insurance, utility costs, all those things are pushing up towards the bottom. Well, what does that do? That squeezes your bottom line. That squeezes NOI, right? And I'm not trying to say we should throw rocks at the big fat landlords here, but what that does do, if you squeeze the bottom line, the NOI of a property, all that can do is flow back to the property value, right? Think about that. So it's everything changes. It's going to change. There certainly will be more regulations. There certainly be more pushbacks from landlords on this stuff. There certainly will be landlords will get a collective going, as there are in many other places, a collective voice, maybe even collectively lawyer up with the city to negotiate some sort of a middle ground here. But it is a interesting conversation as rent control gets debated. That's another thing that gets talked about in the article. In other markets such as Canada, India, and Sweden are dealing with the impact of regulation. It's not saying that regulation doesn't need to happen, but overregulation of markets causes inadvertent swings in things that the government wasn't intending to do. The government never is trying to keep property value down. They're just trying to protect people, and at the end of the day, maybe they do too much of it and it really affects value. And then they're going to take the reins off a little bit. So expect the pendulum to swing a little bit further back, and maybe some of these regulations come off. That'll probably cause a spike in real estate value. So if you guys have capital to put to work, if I were, looking to put a lot of money to work somewhere, I'd actually start looking at some of these markets, because right now people think, oh, geez, that's really bad. The property values have declined, but maybe it's a good time to buy. Maybe right now is a good time to buy in New York because of all the pressure that's caused there. People don't want to get in and buy into these markets right now. So maybe it's a good time to get in. And as the pendulum swings a bit further, right, maybe that causes things to go back up, right? I don't know. For what it's worth, guys, consider it. Okay. So that's my thought on New York City property values. New York City, $75 billion decline in property value over the last couple of years. Maybe it's an opportunity. Check it out. Thank you to BQ for posting the article. Make sure that you guys check out that article there. That article is, you guys can grab it. If you guys are a DeRosa Insiders member, that article is right there in our comment section for you guys to grab an article on Bloomberg. Hope you guys enjoy it. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to derosagroup, DEROSA group.com, derosagroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.